Hey everyone, Phil Stevenson, Mortgage Nerd here. So I'm going to take this opportunity, even though I'm not present at the meeting because I couldn't make it, I decided I'm going to make a video. I mean, that's what I do a lot of, right? I make a lot of videos as Mortgage Nerd and I post them on the internet. Well, why not make one for my BNI chapter? So I'm going to go through several different topics. I'm going to start with actually a rate update that's from last week, last Thursday. So it's a little bit dated, maybe things went up or down or whatever, but either way the point is to help you understand the type of person that I am, the type of advice that I give, and the difference between working with someone like me as opposed to someone out of a call center where, you know, they don't know this type of stuff. They just say, hurry up and lock before rates go up. And if they tell you that, I'm gonna show you what could happen. So I'm also going to talk to you about things like the reverse mortgage. What is it? I mean, real basics. If you know anyone that's 62 and over, maybe I could help them. Another thing is a renovation mortgage. What is that? The renovation mortgage really could help some people in this market that are having a hard time finding a property that's fully renovated because they're being purchased cash or with larger down payments than what these clients have. So renovation might be the way to go. All right, BNI, so here's the rate update. Today is Thursday, the week before my presentation. And so let's look at how I'm an advisor and not an order taker. All right, BNI, so here you can see that as mortgage bonds go up, rates go down. As the 10-year treasury goes down, rates go down. That's what we want. There's different coupons too that we look at, all depending on where the rates are. Ginnie Mae is the FHA and VA, and you know they all usually go in the same direction, but either way, they all are driven by different bonds and coupons. So now I'm drawing this line, as you can see, and this shows a trend. This trend is upward on the mortgage bonds, which means a trend of rates going down. So when people call me and say, oh my God, I need to lock my rate because I'm afraid that they're going up, I say, no, we don't want to do that because right now the trend is our friend. The trend is our friend until the end. When it's the end of the trend and it turns around, then that's different. But these are not turns around in trends, but I do lock people at this point. I lock people, this was Monday and Tuesday of this week before it turns, because this is a better rate. I mean, like, it's not gonna go from 3.125 to 3, but it might mean, like, if they were paying $400 in points for the 3.125, now it's no points, something like that. It's different for every case. So rates are on a downward trend. They might go lower. We might go back to where they were in late 2020, early 2021. If you know anyone who didn't get on that refi boat and the ship sailed in February and March, guess what? That ship is coming back. They forgot some passengers, and those passengers are the people that need to refinance. So come to an advisor, have your friends and family come to an advisor, even for realtors. You know, I don't tell people hurry up and lock at the beginning of the process. I made a realtor look like a rock star by recommending me because they were going to another company called Femby, and Femby was like, oh, you need to lock right now. My rate was actually a little bit worse than theirs, but I said, no, the rate is gonna go down. Femby and I were at 3.375 on a 60-day contract. I locked them to close at 3.125. They're only putting 5% down. It was, you know, completely different when you work with someone who knows what's going on in the markets. I'm not right 100% of the time. I would say 90% of the time I'm right, and that's it. So let's go on to the next segment. So what is a reverse mortgage? Those of you that have been BNI for years, where I only did reverse mortgages years ago, you know, I would always say it's the most misunderstood mortgage that exists. It's for retirees, essentially. You don't have to be retired. You could still do it and keep working and just, you know, really maybe put your money, instead of into your mortgage, you can put it into an investment with Dennis. You know, there's so many things that you could do with this. It's just, there's a lot of misconceptions out there. The first reverse mortgage I ever did was for my grandparents. That was in 2008. Since then, I've done over 1,000 reverse mortgages for a lot of different types of people, from Hibiscus Island mansions to you know, little condos with you know, little old ladies that make $500 or $600 a month of Social Security. It all depends. All you're doing is, instead of taking the money out of your pocket every month and sending it to the lender, you're sending it to the bank when you do that. When all of us send our money there, they take the interest and that's it. Your money's gone. With a reverse mortgage, you're not sending in a payment, or you don't have to send in a payment, but you can if you want to. So if you're not sending in that payment, what happens? Well, the interest you're not paying, the mortgage interest, because it is a loan, it's a mortgage, adds on to your loan amount. If you have a $100,000 loan that you borrowed and you don't have to make a payment on, but your interest is 2%, because that's when they're that low right now, then in a year you'll owe $102,000. In 2 years you'll owe $104,000. It's a simple example to help you visualize and understand the way the reverse mortgage works. All right, moving on. All right, so sometimes you want to buy a house, but everything that's all fixed up and ready to move into isn't ready. So you need to buy a property that needs renovations. If you need renovations, then you can do a renovation loan. which allows you to buy a house at whatever price, add the repairs to that price, and roll it into the loan. So you're not coming 100% out of pocket for all those expenses. You're rolling it into the loan. So an example, let's say you buy something at $400,000 and it's $100,000 that you need to put into it, and the appraiser agrees, yeah, the value is $500 when you make all those repairs. Well, guess what? You only have to put 10% down, or maybe 5% down. So you're putting $50,000 down on a $500,000 property that's going to get $100,000 in renovations in it. That's a renovation mortgage. If you know anyone that's struggling to find the right property, the property of their dreams, hey, this property didn't have any lights like this. I mean, the lighting was terrible. So even if you just want to renovate and make the lighting more modern, I mean, there's a lot of things you can do with the renovation mortgage. That TV did not come with the property either. All right, so right now we're getting towards the end of the presentation, so I'm going to go through this as quickly as possible. All right, yeah, just kidding. But so, you know, one of the questions, I guess, is where's the market going to go? I already mentioned that interest rates should be heading down, but where's the real estate market going to go? There's this ridiculous demand going on, this irrational buying, this FOMO, fear of missing out. You know, fear seems to be a bigger motivator than you know, anything else. So it's kind of like stocks. I'm sure Dennis and Gabriel could tell you, and they're advising, you know, that people will come and they'll buy it and they buy Tesla at its highest, you know, because it's only going to keep going up. But then when it's low, they don't buy it. Well, it's the same in real estate. So, you know, it's tough to say how long this is going to continue. I hope it stops. I hope the value rising tapers. Interest rates staying low is only going to exacerbate that. But one thing is for sure, there's not going to be this rampant wave of foreclosures, of new foreclosures, of people that just recently bought. I don't see a bubble. I think there are individual bubbles. You know, people right now that are putting $20,000 and $50,000 over appraised value on a property, that might be a little mini crash for that individual, or that they're just going to be upside down for a while. The good news is that mortgages are extremely difficult to get. So that means that a lot of people qualify and they're not going to end up missing payments because they can't afford the property or they can't pay it. There's always going to be those that can't. There's a natural number of foreclosures. By the way, there's Ragnar. Ragnar, say hi, Ragnar. Hi. A natural number of foreclosures in a market that are needed. We need some right now to help with the inventory. Well, so as the sun is setting on this presentation, I want to remind you guys that some of the best referrals for me are realtors. Realtors give me a lot of business. Other people in the mortgage business give me a lot of business because they don't do reverse mortgages, they don't do renovation loans, they don't do VA, they don't do bank statement loans. Whatever they don't do, I can do, and I've gotten very good at all these different niche markets. Renovation's the one that I'm kind of learning, just to be honest, but every one that I've focused on, I've gotten really good at. So that's pretty much it. Mortgage Nerd out. Sun is setting. Guys, that's enough. Get the out of here.